In this video, we're discussing growth opportunities for JD.com stock, one of the largest e-commerce companies in China. To start, we'll highlight Jingxi Business Group, JD.com's business that focuses on serving customer demands and working with small business owners in lower-tier cities. Lower-tier cities represent the main source of JD's user growth, with over 80% of new users coming from lower-tier cities, characterized by smaller populations and lower income per capita. Lower-tier markets account for more than 70% of China's population, and since many of JD's current users are from higher-tier cities, this presents a massive opportunity for future growth. Jingxi Business Group consolidates social e-commerce platform Jingxi, convenience store business Jingxi Tong, and community group buying business Jingxi Pinpin. JD.com is also making efforts to strengthen its supply chain capabilities in lower-tier markets through strategic investments, including Xingchen, a leading community group buying e-commerce platform, and China Daily Group, a wholesale produce market operator. These investments aim to realize synergies between JD.com and its investees in lower-tier cities through collaborations in technology, supply chain, and logistics. We discussed JD's social e-commerce platform Jingxi in our previous video on JD, so we'll focus on community group buying business Jingxi Pinpin and convenience store business Jingxi Tong in this one. Community group buying involves having a group leader who purchases groceries and other items in bulk on behalf of local customers. Then, a retailer delivers these goods to the group leader, who then distributes them among the local customers. In turn, the group leaders receive a commission from the order. Group buying is effective because it lowers delivery and customer acquisition costs for platforms. Currently, group buying is one of the fastest growing markets in China, leading to increased competition. While the group buying business has a large market size, it also has a highly fragmented supply chain, presenting a major opportunity for JD to improve the industry's operating efficiency through its technology and differentiated business model. The group buying business model works better for smaller ticket size items in lower tier markets, as it can generate better fulfillment efficiency through short chain logistics. Currently, most players in this market build their business models primarily driven by traffic. However, JD management believes that platforms will eventually fall back on competing on the cost of products, operating efficiency, and customer experience. As a result, JD sees community group buying as a long-term initiative, taking a differentiated approach by focusing more on logistics. JD launched its group buying business, Jingxi Pinpin, also known as Pinpin, in certain cities in January. While entering into this group buying business, JD needed to build a localized supply chain, short chain logistics network, as well as technologies and tools to support their operations. They also needed to recruit group leaders, business development teams, and educate its new users city by city. As a result, there are many areas that need investment, as JD's group buying business is still at an early stage. Revenue contribution from Pinpin so far is small, as JD has only tested the model on a small scale in 1 or 2 cities. Based on its initial test on a small group of users, JD management stated that there was strong conversion of Jingxi users to Pinpin users. As for its convenience store business, Jingxi Tong, JD established additional supply chains. Jingxi Tong now has over 1 million small-medium enterprise customers, and some of these convenience store owners can be naturally turned into the group leaders of its Pinpin business. While JD management didn't provide guidance on the extent of how much they will spend on these new initiatives, they did emphasize that their strategy is to not acquire users through short-term subsidies, but to invest in building out the logistics capabilities and technology to operate this type of business. Beginning the first quarter of 2021, JD plans to report the operating results of Jingxi Business Group separately from the JD Retail segment. JD management has stated that they are fully dedicated to this initiative, sending their best people to this new business group and providing supply chain support from its core retail and logistics business groups. If JD can successfully gain e-commerce market share in these lower tier cities through Jingxi, this could drive significant future revenue and earnings growth for JD.com in the future. Another major opportunity is the listing of JD Logistics. JD Logistics has one of the largest fulfillment infrastructure in the world that provides integrated supply chain and logistics services. JD owns over 900 warehouses, which cover 99% of China's counties and districts. Because of its logistics efficiency, most of JD.com's online orders are delivered on the same or next day. On February 16, 2021, JD Logistics submitted a listing application form to the HK Stock Exchange to apply for the listing of JD Logistics shares. On the date of this announcement, JD held a 79.12% ownership stake of JD Logistics. Details of the proposed spinoff, including the extent of the decrease in shareholding percentage of JD and JD Logistics, have not been finalized. However, upon completion of the proposed spinoff, JD will continue to indirectly hold more than 50% of the shareholdings in JD Logistics. This means that JD Logistics will remain a subsidiary of JD. JD Logistics' valuation is estimated at $40 billion, making JD's 79% stake worth around $31.6 billion. However, JD's stake is expected to be diluted after the listing, with a 50% stake being worth around $20 billion. This means that JD's stake in JD Logistics would likely fall in a range of $20 billion and $31.6 billion based on a $40 billion market valuation of JD Logistics. That being said, shareholders and potential investors should be aware that there is no guarantee that the proposed spinoff will take place or as to when it may take place. Further announcements will be made regarding the JD Logistics listing. Moving on, we'll discuss JD's finance and digital technology business. This business was previously referred to as JD Digits, but is being restructured into JD Technology. On December 30th, 2020, JD.com announced that its board of directors authorized the company to explore the feasibility and terms of a potential spinoff of JD Cloud and AI to JD Digits. In exchange, JD would receive equity in the combined entity, which is being renamed and restructured into JD Technology. JD previously owned a 36.8% stake in JD Digits, and this stake is likely to increase following the company's restructuring. Because JD Cloud and AI isn't a major business segment relative to JD's core retail business, it's likely that the market didn't ascribe much value to this entire business. However, by combining JD Cloud and AI with JD Digits, this could result in additional market appreciation for this business. This could lead to a higher valuation of JD Technology as a whole compared to JD Digits alone. However, due to additional financial technology regulation, the original valuation of JD Digits was likely impaired. In addition, JD Technology has reportedly planned to withdraw its IPO plan because its name, its business, and its senior management team have all changed since the initial listing plan was first filed. JD Technology may resubmit a listing application in the future, but details are unknown about the future IPO timeline. JD also became the first e-commerce company to partner up with the People's Bank of China to test the applications of China's digital yuan, its official digital currency. Moving on, we'll discuss another opportunity for JD, JD Property. JD Property is a subsidiary of JD that develops and manages logistics facilities and other real estate properties. With the successful launch of 2 logistics properties core funds, JD Property launched its first logistics properties development fund with $460 million of assets under management in the fourth quarter of 2020. So far, the total assets under management of core funds and development fund has exceeded $2.9 billion. In addition, on March 10, 2021, JD Property entered into definitive agreements for Series A preferred share financing with co-lead investors Hillhouse Capital and Warburg Pincus. The total amount expected to be raised is about $700 million. JD.com will remain the majority shareholder of JD Property after the completion of this deal. By leveraging Warburg Pincus and Hillhouse Capital's industry expertise and resources, JD Property will further strengthen its infrastructure property management capabilities and its position as a leading player in high-quality infrastructure properties development and operations. Next, we'll highlight some key financial numbers from JD's 2020 fourth quarter earnings report. To start, annual active customer accounts increased by 30.3% year-over-year to 471.9 million, and increased by over 30 million from the previous quarter. Overall, JD generated $34 billion in revenue, increasing 31% year-over-year. In terms of profitability, non-GAAP operating income was $186 million, increasing 72% year-over-year. Meanwhile, free cash flow in the 12 trailing months increased 79% year-over-year. Next, we'll break down JD's financials by business segments, which include product revenues and service revenues. Starting with product revenues, electronics and home appliance revenues made up 60.3%, with general merchandise making up the remaining 39.7%. JD generated $17.75 billion in electronics and home appliance revenues, increasing 25% year-over-year. Meanwhile, JD generated $11.71 billion in general merchandise revenues, increasing 34% year-over-year. Net product revenues totaled $29.45 billion, increasing 28.4% year-over-year, and made up 85.7% of JD's total revenues. Moving on to service revenues, marketplace and advertising made up 54.4%, whereas logistics and other services made up 45.6%. Marketplace and advertising revenue totaled $2.68 billion and increased 29.7% year-over-year, while logistics and other services revenue totaled $2.24 billion and increased 95.3% year-over-year. Net service revenues totaled $4.92 billion, increasing 53.2% year-over-year, and made up 14.3% of total revenues. Compared to 2019, net service revenues as a percentage of total revenues has increased from 12.3% to 14.3%, driven by increasing marketplace, advertising, and logistics revenues. Moving forward, this higher margin segment will help JD increase its overall profit margins. Moving on to gross profits. Gross profits have steadily increased through the years. This is due to increased revenues and increased gross margins. The increase in gross margin is driven by increasing economies of scale from the first-party business, as well as significant growth in the higher margin advertising service business. Despite an increasing margin improvement trend, fulfillment gross margins, defined as gross profit minus fulfillment expenses, decreased slightly year-over-year due to additional investment in logistics infrastructure, specifically in lower-tier areas. Meanwhile, operating margins have increased slightly due to increasing operating leverage from JD Retail and reduced losses in JD's new businesses. Overall, regarding profit margins, with increased investment into new businesses such as Jingxi and additional logistics infrastructure, JD's margin improvement could be delayed in the near term. That being said, with massive growth opportunities ahead, JD.com will be an important company and stock to keep track of, so make sure to subscribe to stay updated for new videos. Leave a like and comment down below what videos you'd like to see next.